Good morning. Happy Friday, my futures family. It's time for the market prep. Friday, June the 2nd. My name is John Hoagland. Thanks for trusting me with your time. And as always, our focus is seeking accurate context, good risk management, and remaining patient in our trading. If you're already in the markets, hopefully you've got things going your way. We did have some numbers come out this morning, the unemployment, the long-awaited unemployment numbers this week. The unemployment rate was 3.4%. They were looking for 3.5%. It jumped up to 3.7%. However, the non-farm payrolls number, where they were looking for 180,000 new jobs, they got 339,000 new jobs. Private non-farm payrolls also jumped from from last month's 230,000 to this month's, or the last month's, 283,000. They were looking for 160,000. So both of those blown out of the water. The participation rate was 62.6%. They were looking for 0.1% drop in it. It remains at 62.6%. So whatever that means to the talking feds and however they are going to use that information in the coming FOMC meeting is, of course, up to them. This morning, we've seen stocks continue higher after the debt ceiling bill passed the Senate, and investors are close to being able to take at least one uncertainty off the list, at least for now. Main focus today, of course, will be on the unemployment situation and, again, how that new data is going to affect decisions in a week and a half. Well, just under 2 weeks. The FOMC meeting on June 14th. Crude prices have recovered and headed higher on apparently lower concern that the U.S. is likely to fall into a recession. There is an OPEC meeting that begins tonight. Going to go probably all day Saturday and into Sunday, so we'll find out what their plans are. Maybe a little bit of idling in crude oil today because of that. As far as the VIX, down a little bit this morning, 1547 last I checked. Yesterday at this time it was 1746. Dollar index lower, 103.50 last I checked. It was 104.24 at this time yesterday. The yield on the 10-year, just about the same as it was yesterday, slightly higher than settlement. It was 3.64% yesterday, 3.63% now. That's just the last I checked, pretty much holding steady. We've started kind of keeping track of the initial balance extreme count. Yesterday, we had 5 out of 7 of our markets that we watch leave one extreme. Well, that was the day before yesterday. So the count yesterday was 5 out of 7. Today, we have 7 out of 7. It happens a lot, folks, and it's why I'm kind of pointing it out. I'm gonna kind of keep track of this, and we're gonna get some solid stats on how often one of the initial balance remains an extreme in the regular trading hour session. I've seen it as high as 90%. I've seen it as low as 60%, but that's still pretty good odds. This morning, we always ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And please make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Good morning, everyone. Charles March, first in the room, winning the prize this morning. Shaw, good morning. Scott saw and he conquered. George Lacey is saying good morning to everybody as well. I like Will's comment here. Good morning, everyone. Welcome to the alternative universe of strong job reports equals low likelihood of Fed action. Please tell me what everyone is smoking and can he have some? Jason, good morning. John, Don, Bill, Pershatam, good morning. Chad, John, Hagel Matters, Robert, good morning. Bear Goes Long, Sarah Hall, prayers and love and happy Capital Preservation Friday to you as well. Anissa, good morning. Rooster crowing early this morning. John, good morning. NASDAQ, Theo, good to see you. Fred Decker is back. It's good to see you, Fred. Hoping things are going well. Looking forward to getting back in touch. George Duque, good morning. Digging the new sounds. There you go. You know, a lot of good feedback on that new music. That's an original by our good friend Jack here, I believe. Brian, Ashraf, Ash, good morning. Chai T, Shaw, James, good morning. Joe, composure. That is a good word. That is a good word for today, Joe. Thank you for posting those. I always love that. Pete, good morning. Alejandro, Grounds Hero, Andy, Bleed. And it is Friday. It's a short week this week, wasn't it? But sometimes those short weeks seem a little bit longer than the normal weeks. Not feeling that this week. I've had a pretty decent week, and I'm just looking forward to seeing what these markets do today, making a little bit of dough, taking care of the things I have to take care of, and then getting into the weekend. My wife, Donna, works at a school. She has her last day of the school year today. She's going to be such a happy person when she comes home. It's going to be a fun weekend, and I'm looking forward to it. She gets a couple of months off every summer, and it's good to have her around the house. It's kind of lonely around here. Well, I do have my office buddy Lacey to keep me company, but it's nice to have somebody around during the summer, and I'm looking forward to having her. And I know she's very excited about getting a little bit of time off from the school. So there were a couple of questions that I had emailed in yesterday, and I'm hoping that those folks are watching today. Let me see if I can pull you up here. Quessy was one of them, and Bob was the other one. If you guys are here, let me know, because I'm going to have probably a little bit of time at the end of the prep this morning to go over some of the questions that you asked. It's always easier to kind of do it in person than typing out a long email. So we'll see if we can see if you're here, number one. And number two, if you are, we'll take a look at those at the end of the prep. Right now, we're going to jump into the charts and see what the tea leaves are saying. All right, here's the daily in the S&Ps. Now, the S&Ps are in rollover, so some of the volume and open interest information is going to be a little bit lower. However, yesterday on this push to the upside, we added 13,000 contracts in open interest. That includes all of the active traded contracts yesterday. That's the June, the Sept, and the DEES all added open interest yesterday. So when that happens, it looks like it is not necessarily a hollow rally in the S&Ps yesterday because of the addition of the open interest. Volume was a little bit low, but it was higher in New York. The New York volume was higher on this rally. So this rally yesterday, because of the open interest, because of the volume in New York, doesn't feel hollow. It feels real. It feels like there was money coming into the long side. We see that the market is holding overlapping to higher. We're working the weekly kickoff high pretty hard here. That weekly kickoff high again is 42.55, and it is in play today. It has been in play in the overnight session. We're going to see if we see some longer term adjustments in inventory at that level. But remembering its rollover, the longer time frame traders are going to be reluctant to adjust inventory because they're focusing on their rollover. They can make a lot of money, they can lose a lot of money, just depending on how they manage their rollover. And it's a little bit labor intensive. So take a look at the 30-minute chart. We're going to see what we have as far as short time frame trading is concerned. Now, yesterday we were looking at opening in range and in value. Here's a little bit of an example of why I always say when we open in range and in value, be patient, because the best trade location is likely to come sometime after the open. Now, we opened right here yesterday. The market looked lower. We lost a little bit of money trying to get short into this and make whole money yesterday. But when the low was put in, this ended up being the best trade location of the day. It came in about a half an hour after the open. The market then just took off and rallied. Now, we talked about this trend line and the possibility of a bull flag. I wasn't really trusting of this trend line, but this is where I was able to get into this move and take some profits on the way up. We missed it down here, even though my kind of my expectation was to try and find weakness to buy to see if we can get here. We didn't get to the low end of the channel here. We got to the low of value from the previous day, and we turned around and off to the races we went. Now, this, of course, we know is not a purely technical move. There was, a high probability that the Senate was going to pass the debt ceiling bill, which they now have. Well, here we are. I did not, for some reason, get settlement put on this. We always like to do that. 42.28 even was settlement. So that's going to be close enough for rock and roll right there. The market opened here. It's now trading here. We're holding some overnight inventory to the long side. We had, the 7 o'clock, 7:30 number come out, gave us our test of weekly kickoff high and a test back into range. Looks right now, if we were to open, we'd be opening with a gap. So now we're faced with a couple of different decisions. Opening with a gap and being unable to close the gap has us looking for longs, but we're up against a inflection level that has shown the ability to resist price before the open. All right. So what are we looking at? Well, the bull flag breakout happened yesterday. The measured move for this bull flag breakout has price approaching 40 to 70. Gunga, I don't know what your issue is, but this isn't the place for it. You have a problem, contact our support team. I happen to think this is a great company. So, where was I? The bull flag breakout has price reaching a measured move up to 42.70. We're going to have to get through weekly kickoff high first. So if we do get some play in regular trading hours around weekly kickoff high, it's going to be somewhat pivotal. Now, occasionally these weekly kickoff levels become magnetic. If that's the case, you really have to try and stay patient, looking for some decision making in and around that area. Again, our longer time frame traders are going to be reluctant to become directional because of rollover. We're probably going to be moving to the September contract at some point middle of next week. The expiration is the following Friday. It is Friday the 16th after the FOMC meeting. That's going to be quadruple witching day. So, again, that rally yesterday did have some teeth to it. I'm going to be really interested in seeing Really interested in seeing what happens up here at weekly kickoff high. What about the TPO charts? Let's take a look at those. Double distribution trend day with a couple of kind of layovers here. IB extreme is of course the low. We have now of course put in another recent high in the overnight session. We didn't get to this one yesterday. We've got another recent high in overnight session. It's not likely to hold for very long. What about that composite profile? Yesterday's low, value high in the composite profile. And this, remember, goes all the way back to the beginning of April. So we're starting to fill in some time up here, which is indicative of acceptance of higher pricing, right? All right. So back to the 30-minute chart. I'm going to be working the gap. I'm going to be working weekly kickoff high. And if things go well, I'll make a little money and call it an early day in trading. Had a pretty decent week. Let's take a look now into crude oil, which has just opened up a few minutes ago. So the auction to the downside was, I thought, doing relatively well. We did mention the fact that we were coming into an area of excess on these lows here. So that was a little bit of a caveat to the move to the downside. I want to see what the open interest was here. 31st. We added open interest on this move down, but it wasn't very strong open interest. Volume was good. We got a nice turnaround yesterday. Well, what happened yesterday? We found buyers down here. We added 13,000 in open interest, and we see the market kind of closing right at weekly kickoff low. Settlement was 70.10. Weekly kickoff low was 70.15. So right in the zone. Overnight low 70, and off we go back to the upside. Well, take a look at the 30-minute chart. What does this mean for today? Looks like we've opened with a gap in a gap. The move from the downside here, although it is really just beginning, is relatively organized. We haven't left any gaps or unfinished, unrechecked points of control. We are now back above weekly kickoff high. There's plenty of visuals for us to reach today in the fact that we can close this previous gap. We've tested to this naked point of control. We've got another naked point of control up here and weekly kickoff high above that. So the overnight inventory is long. We did open with a gap. So gap rules, if we can't close that gap relatively early, we're looking for opportunities to continue this move to the upside. As we all know, anything can happen, right? Here's the TPO chart. Double distribution, trend day to the upside yesterday. Decent volume, good open interest increase, excess low on Wednesday, a little bit of excess here, kind of weaker excess up here. So if this market is going to be taking care of any business, it's probably going to be either close the gap to this point of control or not close the gap and trade up to this point of control and this point of control. How about the NASDAQ? So the NASDAQ is, of course, has been and always does tell a slightly different story than the S&Ps. Yesterday's rally in the NASDAQ cut off a little bit of volume in futures. That doesn't disturb me that much. It tends to happen in futures, right? When equities rally, they don't tend to bring lots of volume. Volume tends to come in on the downside when everybody wants to jump in on the move. So The rally yesterday, we added 400. That's a really inert open interest number. It makes that rally that we that we did yesterday in the NASDAQ feel a little bit hollow. Well, the NASDAQ is far ahead of the downside structure that the S&P is. The NASDAQ has been moving stronger higher because of AI for a couple of months now. So it's telling a different story, and I'm a little bit concerned for longs with the inert open interest that came in yesterday. Anything can happen, of course, but upside structure remains for sure. Again, this is also in rollover, so we've got to keep that in mind as well. Here's the 30-minute chart. So our measured move off of this bull flag takes price up to here. Let's call it 14,635. We got a long way to go before we get to weekly kickoff high. Whoops. I messed that up. Hang on. Because this market has been so strong, that's why that has been presented as so far away. The market is already in an upside move. It looks like we may or may not open with a gap. We've seen overnight inventory adjust already back to the opening price from last night. So we don't have the overnight inventory. The market, the NASDAQ, is actually presenting as a little bit weaker than the S&Ps this morning. And that can be because the market is overextended to the upside. It's going to take new business to bring this market back to upside momentum. Here's the TPO charts. Double distribution trend day to the upside. IB low. Testing the excess from what is this, Wednesday's excess high, but we have another high that occurred in the overnight session, hasn't even taken out this high that happened in the overnight session. And as we know, the market does not like to leave those hanging out there in the overnight session. The very high degree of probability that is going to get taken out, and sometimes very soon. Let's take a look at gold now. All right, so we've got an excess low here from Tuesday on the daily. The price has been trying to move higher. We've broken out above a pretty solid trend line. How has the market been performing? It has not been performing very well. As a matter of fact, yesterday we cut off a little bit of volume and we lost 1,500 in open interest. That's not a confident move to the upside. It leaves it a little bit hollow. Leaves it a little bit hollow. Got an inside extended trading hour range today. So this actually could be kind of presenting itself to become a potential bear flag. So here's that move to the upside. We're losing open interest. Well, we lost open interest yesterday. We've got small ranges. It's starting to cut off volume. We take a breakout below this trend line that could bring us to at least weekly kickoff low. But we've got to be patient. What are we looking at as far as inventory today? Well, we didn't have any before the number came out. We've got a pretty decent move to the downside. We've got Delta presenting as slightly negative on the regular trading hour session today. Not looking at anything huge as far as participation is concerned here. So again, try and stay patient. The market did open in range and in value. We've put in a low. It looks like it's a weak low from the overnight. Here's the overnight. Here's our day session low. Not a very strong low. But yesterday was a normal variation, extreme day, excess high, excess low, low excesses, but still in range and in value. I'm going to definitely try and stay patient. Here's the euro. So again, like gold, we just had a breakout to the upside that occurred yesterday. How did it do? Not good. Volume was lower, and we lost 700 in open interest. Got to remember euros coming in to roll over as well. Just barely at the front end of it. So that's a weak performance for a breakout of this magnitude, in my opinion. Well, what does it mean for us today? Well, we're looking for new buyers. We're looking for new business to push this market higher off this trend line. If we don't see it, we may see the market come all the way back to that trend line, which could offer an opportunity for us. We've opened, we're in range, we're in value. Probably there's a good probability of some repair from the trend day that happened yesterday. Here's the trend day. Traded to this point of control. We didn't quite get to this point of control, and there's a lot of lack of confidence in this profile on this move to the upside. We've left anomalies, a hole. We've left an anomaly here. We've got a 2 anomaly here. We've got another 2 anomaly here. We've traded to those, but we've got this one hanging out down here. Very toothy volume profile. The market is spending time taking care of any business that didn't get done in those areas. Let's look at the 10-year. And so here's the 10-year. We've got a pretty decent excess, or do we, on this low here? We've got a double bottom here. That exactness sometimes tells me that there's a little bit of weakness to that move. How have we been doing on the way up? Yesterday, the day before yesterday, we lost 28,000 in open interest. Yesterday, we lost 40,000 in open interest. This is traders getting out, not getting in. This is short covering. This is not new business coming in. This is old business being taken care of. It could be another bear flag. Here it is. Now we've opened through attrition below the bottom of that bear flag. There it is. You see the market pushing lower already this morning after the 730 numbers. I'm going to be looking at this area up here as some pretty decent resistance if we even get the opportunity. And then weekly kickoff high, of course, would be a kind of an ideal opportunity because it limits risk. But we're seeing hints of continuation lower off of this bear flag. Here's the TPO charts. So a big initial balance yesterday. Did leave the low of the open interest, the initial balance as the low, and just a big first hour and a half of range, and then it just sat here all day long. It just sat. So finally, we're starting to see a little bit of excess on the highs here. Finished upside auctions, unfinished. 3 days in a row of weak highs. Now we've got a strong high. We're going to start to see this market pull back, especially after breaking out the bottom of the bear flag. We're going to have to see rates moving higher. Maybe that's in the wind. Who knows? What about the natural gas? So yesterday, we added 15,000 on higher volume. The downside structure is good. The auction appears to be healthy. We've got an inside extended trading hour range so far this morning, and as far as I can tell, it's inside regular trading hour range as well. We've got some weaker structure above. I don't think we have any structure below. How low can this thing go? I'm so glad I don't trade this market. Although, sometimes there's pretty good signals in it. So if we can't take out the low, it seems like a cinch that we may come up and take care of some of the unfinished business in this gap and up to this point of control. But I'm not predicting anything, and I don't trade this market. I'm just trying to read the tea leaves around what's going on in it. Here's the TPO chart from yesterday. Normal variation, very narrow range, IB high, a very prominent point of control down here, facilitated a lot of trade yesterday in this area. It's going to look for a new area to facilitate trade. After all, what is the market's job? It's to facilitate trade. If it's used up its ability here, it's going to go looking for other areas or other levels to facilitate that trade. All right. I don't think that my folks that emailed me in are here, and I will email them back, see if I can get them to come into group coaching on Monday, and we'll see what happens. As far as our troll today, I apologize for that. He kind of surprised me. We don't see that a lot here. And it doesn't, we expect it. And I try and prepare myself for those types of things. No matter what you do, you're never going to please everybody. And I get that, and we get that. But the point here is to be thinking and talking markets, context, ideas, and kind of threw me off a little bit today, and I apologize for that. And for all you guys kind of talking about this and everything, we appreciate all of your feedback and your help and everything on that. There's a lot of comments here, and I'm just going to try and do what I do every day, and that's look at these markets in context and try and help traders get an idea of what it takes and new things to think about, and always be, of course, thinking about that auction process. There's nothing I would do here that would harm anybody. At least that's one of my biggest goal is to cause no harm. And and I think you guys see that and you feel that, and that's a beautiful thing. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Be kind to yourselves. Do something nice for yourself this weekend. We work very hard at this. We deserve it. Be kind to others. Say a prayer for peace. And have a great trading day. Blessings to you all.